How's it going, everybody? It's Jose Farouk here, and I'm going to quickly take you through the AUD JPY daily analysis for Thursday, July 17th. As you already can tell from the charts, the market's been acting really wonky. Prices have been going down, even though there are no major news events for the currency market. Remember one thing: major news events in general also affect the currency market. So, for example, the Malaysian flight being shot down is a major news event, and which could have led to the market decline that we saw in pretty much every currency, especially the major currencies that I usually trade. Saw a huge decline, and if people that weren't trading downwards, then they were losing, no matter what anybody says. So I'm going to take you through the AUD JPY, and if you already know, then the dash lines, in between the dash lines, is a 5-minute chart. In between the dash lines is today, which is Thursday. Everything beyond this is Friday. Friday in the Eastern time where I live has not occurred, but this is occurring as we speak because the market is open 24 hours a day, 5 days a week. So let's start. I'm going to show you, where price action happened, where you could have taken trades, the rationale behind it, and where you could have won, where you could have lost. So let's take you through it one time. Alright, so we'll take it through it kind of chronologically as we go along. So let me zoom in this a little bit. Is this the same day? No. Okay, so see, when I zoomed in, this happened. Okay, so we'll start right here. We're watching the market. You don't have to sit in front of your computer, but let's just say you are. You're watching to see where the market goes first. Okay, you're not taking any trades. You're trying to see whether it's an uptrend, downtrend, sideways trend, what kind of trend it is. So when a trend happens, you want to wait for a pullback up. Now, the pullback up can be significant or it can be minor, but you keep on drawing your lines to see what it's kind of doing. Okay, so right now it's just we're drawing the lines to see where this market kind of reverses and what trades you can place. So you found an area of support right here, so you're continuing with the analysis. So for here, you see that it went up, down, up, down, up. So you want to place it up. You can tell that it could be a major, or it could be a major, it could be a minor upward trend because it's making higher highs. Now I'll explain higher highs in a second, but you want to place it drawing over here, wait for the touch to make a call option to the upside, and then you want to place one right here. Remember, it can break at any time, so even here when it broke and went back up, it could have broken right away, or it could have completely collapsed and went downwards. Okay, so you never know, but these rules are fundamental price action rules that people should recognize and know. So is this going to find a new support? We're about to find out. If you had taken a call option because this touched the old resistance, became new support, if you had placed a trade right at the touch over here for 15 minutes, remember we're only doing 15 minutes, we're not doing 5-minute trades, 15 minutes, you would have been in the money unsafely, but you would have been in the money regardless. So the rules still stand. So now, as you can see, it completely broke old resistance, and now it's doing a bunch of wish-wash. We have no idea what yet. So let's remove all these lines right here and try to create new lines, because right now the downward trend is over, upward trend is over. It looks like it's just doing a bunch of shit right now. So went down here, but now if you keep watching the charts, it looks like it's kind of consolidating around this area. Okay, so we'll draw these lines right here to see where the bounces are kind of happening. So when I say bounces, I mean it touches and it bounces up, touches here, bounces down, touches here, down. Now you don't want to necessarily trade all these right here, because you don't know when it's going to break out. What it's doing right now is creating a triangle. A triangle formation is a unknown formation, meaning you don't know whether it's going up or whether it's going down. Okay, it's going to break out though. So see, this is a triangle formation. So now it could have just easily gone way up, or it could have gone way down. You don't know what's going to happen. In this case, it looks like it's going down. So now you don't know whether it's a downtrend yet. It could still be consolidating. You don't know that. You're waiting for some sort of pullback to confirm that. So here's a pullback. This is confirmation that this is likely a downtrend. So what you want to do is for a lot of people that like to draw a lot of lines that are good, really good analytical people, and I do this sometimes as well, is I draw a line at the I draw the line at the close of the candle and the wick sometimes. In a trending market, I do, because usually the price bounces off, 50% of the time, in my opinion, the price bounces off the wick. Sometimes it retraces and bounces off the close, but we're about to find out what happens. So in this case, as you can see, it came down, closed right here. If there's not a big wick, I don't even draw the one at the wick. This was a relatively big wick, so I drew 2. So what happened here is that it went down, up, touched old support, became new resistance, and you could have put a put option here for 15 minutes or half an hour. You could have been in the money easily. So now it broke this old support, so now we're creating a new low. Okay, so as you can see here, this old support became new resistance here. So if you had placed a 15-minute, 30-minute trade at this retrace, then you would have been in the money. So I'm going to keep this trend here, this new lower low that we see here, and we're going to keep all these drawings for now. You don't have, in real time, you probably wouldn't be, but we'll keep them for now. So I retraced, it touched this. If you did a 15-minute, you would have been in the money, and you would have been good to go. So now we're seeing if this retraces back up here. Now, I especially make sure I draw lines at big pullbacks up. So big green candles up. I make sure I draw lines here, because sometime in the future, it could be another retrace here to go down to support, but sometime in the future, if it doesn't touch support, it will hit resistance or support again. So let's just continue, see what happens here. So it looks like it created another low here, and it was a large enough wick for me to warrant another line on this side. So now we're looking for, so as you can see here, it broke the old support and is creating, it is doing something else now. So remember, in any trend or anything like that, only trade 1 or 2 times. Okay, the first couple of times is the best. If you get into the market when you're here, if it's the first time you see the market is when you're here at this point in time, you've seen that the market has already moved down substantially. If it pulls back again, it wouldn't be safe for you to make a trade, because this trend could have been exhausted by then and you could have lost. And in this case, I would have stopped trading right here at the second put. I would have stopped trading. Remember, you have all day and you have 100 different currencies to trade anything you want. So be patient. Don't trade everything you see. So now it keeps going down, and now it creates a new low. So I'm going to get rid of this. This is a piece of shit right here. So I'm going to get rid of this and create one right here. This looks like a lowest low so far. I'll get rid of this one too. I don't know if I'm going to need, because the candle is so small. If the candle's small, I mean, it's up to you whether you want to create a line right there. But if it's not, I usually leave it alone and just leave it there. So now it's going up. And now see, we have a line here pre-existing this old kind of retrace back up. And because this was a big pullback up, I'm not sure, but I feel like it's likely that it will bounce up, find resistance there, because it was a big pullback up, meaning it came down and bounced up sharply, meaning there was a level there that it needed to penetrate. Even here, when this touched, it bounced up, and then finally it broke that. So it might find support here. You never know. If it touches, what do you think is going to happen? Pause the video for a second and think about what you think has happened. I personally would have placed a trade for a put trade downwards, because I feel like this is a sharp movement up and this might become new resistance. And my prediction was correct, because if I had placed a 15-minute trade at the touch of this candle, I would have been easily in the money all the way down here. So I would have been in the money by about 200 pips. And now, what do you think is going to happen when it touches this support line? I think it's going to go up. And it does. You would have been easily in the money if you had traded this support line, because this is the lowest low. Trend downward has been confirmed null and void. So now you're looking for what happens next. So now, because the trend is over, what we're going to do is we're going to remove all the drawings, and we're just going to keep the highest of the trend the lowest of the trend, and the retrace back up here. So now we're looking at either a range happening or another trend forming or this trend continuing. We don't know yet. We're not making any trades. You could technically place a trade right here at the touch and wait for it to do something. So in this case, if you found that this is a strong point of support, which I could have, now if I placed a trade here, I would have been good for the whole range. Whatever happens till the next thing happens. If it ranges right here, I wouldn't have traded it because I'm good with making this trade. I'm patient enough to only take this trade and not take anything else. But if you're impatient, which many people are, you could have traded at the touch of this line and you would have been 15 minutes in the money, but it would have been risky for you. Okay, so now in this case, it kind of just shot all the way back up, and now we're trying to see this broke resistance here. So now we're trying to see what happens with this. So, in my opinion, even though this broke resistance, old resistance, and now it's supposed to create a new support, in my opinion, I wouldn't trade this, and the reason being is someone in the group mentioned that okay, she lost a trade because she waited for the pullback and she did a call option. Now you have to wait for a good enough pullback. Good enough meaning there should be 2 to 3 candles going up and then another 1 or 2, even 3 candles going down, and then you can be a little more confident that that might be a call trade. But in this case, it was just one long ass candle and then one long ass candle down. I don't know what's happening right now. Okay, this is not big enough for me to warrant a trade. If this one big candle were 2 to 3 candles and then a pullback 1 or 2 candles, then I would have taken a trade. But in this case, I wouldn't have. But let's just see what happens. Maybe you were right. But as you can see, I mean, it did end out of the money. So people who taken this trade weren't impatient, would have lost a little bit of money. But that's okay, losing happens, especially in this game. So now we're just seeing what happens. This created a new high of this range, so we'll just keep that there. Now it's basically, it touched this line and it's bouncing up. I'm not taking any trades right now because this line right here was just the high of this trend right here. It wasn't a major point of bounce, so I'm not taking any trades right here. What you're looking for is to see what's happening with the market, if it's ranging or if it's trending. So all this time's going by, we don't know what's happening, but it looks like there is a trend forming because you're getting lower highs. Lower highs meaning this is lower than this, and lower lows is this is lower than this. So now you can confirm that there's a lower high. So you could have placed here, here. Actually, let's remove all the drawings. And when this came down, you could have placed it here, here. This wick is good enough for me to put another candle there. So now, when it breaks this, I'm looking for it to touch this or this line before I put another put option there. In this case, see, it came up here, it touched this line, and it shot back down. So in this case, I would have touched, when it touched this, I would have put a put option 15 minutes and I would have been way in the money. But again, right here, I'm putting another line here, okay, because it went down, up, down again, okay. And now, we're waiting either for this to pull back up to this line and then doing another put option, or not doing anything at all. It touched and it bounced, okay, so you would have been in the money on that one as well. And now it just looks like it's consolidating. So see this lower low, this is lower than this low, this is lower than this low, so on and so forth. So this was a minor trend that happened, and now it's just doing a bunch of random shit. So now we're just gonna hang on and we're going to redraw our lines to see where the highest of the trend was, lowest of the trend was, and where the new range or what it's doing right now lines are. So now this is where the lines are. Okay, so when this resistance happened, it came up here. As soon as it touched this, if you did a put option, you would have been in the money because this is ranging now. This is the trend. Now it's a little range, and let's see what happens, whether it's ranging or trending or what. So it breaks resistance. Now it looks like it came down, touched this line, it's going up. So that means there's probably another trend forming. So we'll move this a little higher right here. So as you can see, it came down, up, down, touched old resistance, and went up again. So now we're going to place another high here. Okay, and it's exhausted right here. Okay, now these minor trends with big ass candles on both sides is risky, in my opinion. I wouldn't trade these. I would wait for more obvious trades. Like, see, this right here to me is an obvious trade because this is the lowest of a huge trend, and then it came down here. Now this is an obvious trade for me right here as well. These are obvious trades right here. But when all these big ass wicks are there and stuff, those are not obvious for me because I don't know what's happening with the market yet. So what we're going to do anyway is we're going to draw a line at this side and this side, and then see what happens. So it's bouncing off of that. So that's a good point of resistance that's there. And this looks like this is the lowest of that area right there. Is it going to bounce? And it does. And it's bouncing again. So this is a really good point of resistance that we found there. So you could have placed a trade. If you've seen that it's bouncing off of this 1, 2, 3, 4 times, you could have placed a trade right here. 15 minutes, you would have been in the money. If you placed a trade right here, you would have been in the money over here as well. But this big long red candle makes me think that there's probably either another trend we're going to form, or it's just going to do nothing at all. But in my opinion, maybe another trend form. There you go. So now, because this was the old support and this had long wicks, I'm going to place a line here and here. I'll get rid of this. Actually, I'll leave that there. I'll get rid of this, and I'll get rid of this. And now let's see for the retrace back up. If it doesn't happen, then we don't take a trade. Okay, so this was a long candle right here. We're going to place a trade here. There's a wick right here, so we'll place a line there. Okay, so it went down and it closed right here. Okay, and then this candle came down and it closed up on top of that. So now we're just waiting for the new low before we make a trade. Okay, now because this went back up, I would expect this to go down and down and down until it retraced back up. Because it closed very close to this retrace, I wouldn't be placing any trades right now. Okay, because right now it kind of broke this area right here. So I don't know whether it's trending or what. But see, it's hitting this place right here, which is the old support. So you could place a put option there and you would have been in the money on that one as well. So now it's doing a bunch of random shit. In fact, it kind of looks like it's creating another minor trend. So what we'll do is we'll remove all these drawings again. High here, low here, and then the retraces. So this up, down, up, down, up, down, up. So this is a new high right here. It's creating higher highs, so that means there's definitely a trend forming, or small one at least, or maybe a big one. Now, is this going to become the new support? Well, see, it kind of was, because this price came down all the way here, hit the old support, and then bounced sharply back up. So if you did a 15-minute, you would have been in the money. And see, it bounced up over here again. But so now we're creating higher high lines. We're waiting for this to touch this, bounce up. I just created this right here, so get rid of this, and now it's just consolidating. So now we're waiting for us to see what happens. Now you can see here that it's a strong point of resistance because it keeps bouncing off that section. So you could have placed a trade here and here, and you would have been in the money. Okay, so we'll get rid of all these lines because now we have the trend is finished, and then we'll redraw the major parts. One here. Looks like the consolidation or the range is happening here. Let's continue. Let's see what happens. Now you can place trades along all these lines right here. I mean, I'm not going to go through every one of them because you can see that it's kind of bouncing off of this. So you could have played 15-minute trades on any of these and you would have won. But I would suggest not doing it more than 4 times, because then you're just exhausting it, and you could be placing it in the wrong spot. Just do it 1 or twice. Now, see, when it closes under the range, then you're expecting the range to be over. Okay, not necessarily going downward because it closes under, but the range simply to be over. Now you're just finding out what happens. If you see this happen, then you're waiting for a downtrend. You expect a downtrend. If a downtrend happens, you don't place a trade until a retrace happens. So this so far is lower than that range. So now we put a line there. We'll get rid of this and see if it retraces. Wow, and then it just dropped like nothing. Okay, so I'll put something here, even though I probably want to trade here. If anything, if I saw 1 or 2 of these candles, I probably would have put a long-term put call there and been in the money. And as you can see, it retraced a little bit and then went back down. But you wouldn't be placing any trades here. You're waiting for this touch right here to place a trade. But as you can see, you would have lost that because this trend is already over. Okay, so then you keep on going. And it's creating another trend. So I mean, the markets today has just been completely fucked up. So let's just see what happens now. This downward trend is over. So now you put the highest and the lowest of that trend, and now you create your higher high and lower low lines. So in this case, it went up here, retraced up, bounced off of this thing, went up. This is the highest high then it went up, bounced off of that thing, went up, and this closed under this line. So if you're a touch trader, then you would have placed that trade and you would have lost. But if you were a trader that waited for the candles to close, then you wouldn't have taken that trade because it closed underneath that last old resistance. Okay, so now you don't know what's happening. So you're removing all your shit. You're placing the highest of the last move, the lowest of the last move, and now you're just watching to see what happens. Okay, so it looks like there was a sharp pullback here, so this could be a point of support, old or new resistance, but it breaks. So now we're just waiting to see what happens. We don't know anything right now. Okay, so we'll move that down because that lower low happened. Now it touches it, and now it's creating another looks like trend, because now you see you have a lower high or a lower low, whichever one you want to see it. So however way you want to see it. So the trends happen like this again. Okay, this is a downtrend, and folks, make sure you don't take opposing trades. Meaning, if it's a downtrend, don't take call options. Take put options only when your criteria meet. Okay, and you still will lose, but you won't lose as much as you will if you take opposing trades. So when it's a downtrend, you want to take trades right here at the pullback. Okay, when these lines intersect. And in an uptrend, you want to take trades right here. So you're always following the trend. Alright? You don't want to take a trend right here in the pullback because you don't even know where to take the trade. Why would you take the trade? Even if you think the trend is exhausted, you don't know that yet. Don't take the risk and take an opposing trade. That's the biggest mistake you can make. So in this case, this went down and then up a little bit. So you put a thing right there. Went down, went up a little bit, touched it. You could have put a put trade here. Remember, that's this place right here. Is right here. Put trade up, put trade up, because remember it touched this point. Up and down. All right. Now it touched that. What do you think it's gonna do? Technically, it should go down, because that's the safest bet, is to follow the trend, and it does. And then you place a line right here, and you wait for another pullback. And if it does, I personally wouldn't trade more than this many. I mean, I would have traded 1 or 2 here, but anything more than this is just too much, and you're just jinxing yourself. So now we'll put a line here. I'll get rid of this shit right here. Okay, so we're waiting for a pullback. Now in this case, I mean, you could have waited for it to come closer, touch the line. You could have placed a put trade. I wouldn't have traded here, but depends on your risk tolerance. So now it pulled back here. So now I would expect maybe the trend is being exhausted soon, so I wouldn't place any trades just to see what happens. But if it became obvious, then I may place a trade. But it looks like it's consolidating kind of. Or because it closed under the support, it could actually be continuing. So now, if it's continuing, you're waiting for a pullback to this level before you place a trade. And if it doesn't pull back, then you don't trade. Okay, so now you have another line right here. So there's no trades here so far. There's a potential trade right there. And I mean, if you're a touch trader, you would have won that, but barely. But it looks like it came up a little bit. Maybe some wonky shit happened in the market. Now, price action doesn't work 100% of the time, and it's wonky a lot of the time, but usually it works perfectly, better than any dumb indicator that you use. I promise you that. Okay, so it looks like it's creating new lows, and because this says low, then I know this is the end of the trend. Remove all the drawings. And let's get the low of the trend and the high of the trend. And let's see what happens after that. Oh, this is the next day. So basically that's the market analysis for AUD JPY. Now remember, do not take every single trade. Take the most obvious trades there are. Let me see if I can point out some obvious trades that you could have taken. It all depends on where your lines are and how sharply up the prices moved from that point. So for example, right here, when it came down and sharply moved up, then I knew sometime in the future this is going to hold as a place that it will be a resistance. Okay, let's see another place. We're looking for a sharp bounce back. Usually in any market, actually, you can find a sharp trace back. It's an obvious trade here. Okay, so see, when this went up and it had a sharp pullback down, that signals to me that this is probably a good point of support. So when this candle closed and when this candle formed and it touched that point, I could have put a put option because I was confident that it was a good place for support and I would have been in the money. And see, this big candle came and another sharp pullback down. So as soon as this touched, I would have known that this is a good place to put a put option again and been in the money. Okay, but 1 or 2 is good. If you keep going on and on and on, you might catch it at a point where it's consolidating or ranging, and then you might be out of the money. And even here, you could have made money, but I wouldn't have traded there. So let's look for more. So, I mean, this level never really came down again. But see, when this came down and then this sharp pullback up signals to me that this is a good point of support. Okay, so when this candle started forming and it touched that area, then I would have put a call option here on the upside, and obviously it would have been in the money again. So I'm showing you the most obvious stuff. Okay, let's look for another one here. Okay, so this technically is a good place, even though it's a range. This is a good place, and this is also a very good place, and I'll show you why. Because this came down and sharply moved up with a big bull candle. So then next time it touches, I know that this is a good place of support. Now, the next time, not the 4th time, not the 3rd time, the next time it touches. So again, here I would have placed a call option and would have won. Same thing on this side. See, not here, but here. It came up and it sharply all the way went up and it sharply moved back down. So here I would have put a put option. Here I would have put a put option, but nowhere else. Because then it just gets exhausted. Okay, so then let's see, there's another one. So right here is a good spot. Let me just see if that's a, that isn't. But I mean, this is just the line. You wouldn't have done anything here. Here's another good one, even though it's not ideal because this bull candle is half the size of this bearish candle. If this had come back to resistance and touched this line, I would have definitely put another option right there. This is a good place as well, even though both these candles are small. This bull candle is almost the size of this red candle. So when it came back here and touched it, I would have placed a trade. And that's it. Okay. I'm looking for any more that I can see. But anyways, you get the idea. If you have any questions, you know where to find me. This is a good one right here. See this? When it came down here, big bearish candle, but a bigger bullish candle. As soon as it came back down, I would have placed another call, and it would have been up. These are obvious trades that you can make, guys. Okay. Now, it doesn't work 100% of the time. You will lose no matter who you are. Unless you are a multi-million or billion-dollar bank or hedge fund, you will always lose. Just be careful, manage your risk, and manage your money. Hope this taught you a lot of interesting things. And go into the chart, go to different currencies, and look for what I showed you today. Take care.